Hello, everyone. Welcome back to, after that quick short break of 10 minutes. I hope you guys are ready for our next panel, which is how do we invest in blockchain and in both the context, East and West, especially in these COVID times. Because we have seen an unprecedented investment in terms of cryptocurrencies. Also, the retail investors are jumping in. And to discuss more about that, we have an amazing panel, and we have Rafael Schultz, the CEO of BCPLabs, and we have Radoslav Albrecht, who's the founder and CEO at Bitbond. And this panel will be moderated by Benjamin Horvath, who's the managing director of Blockrocket. So please, all up to you guys. Thank you.
Fantastic. Thanks a lot. Then good afternoon to everyone also from our side. Delighted to have this panel today with two excellent blockchain speakers from the blockchain space in Germany. I'm Benjamin, Managing Director of Blockrocket. A few words about what we do. We are an accelerator and early stage venture fund. We invest ticket sizes ranging from 100,000 to 500,000 euro in early stage, so pre-seed and seed blockchain startups. Based in Germany, but also invest in startups globally, so US-based and European-based startups. For today, as already announced, we have two excellent speakers. We have Rafael from Blockchain Punk Labs, veteran venture builder and angel investor. And we have Radoslav, CEO of Bitbond, a well-known German fintech company, and I think the first BaFin-regulated STO, security token offering that was held or issued a few years ago. But maybe at this point, you could quickly introduce yourself, maybe a few sentences about yourself, what do you do right now, like what's your current status quo, and Rafael, maybe would you like to start?
Right, thanks Benjamin, thanks for having us here. It's a pleasure to be here, like after this post-corona thing that we have on-site tracks again. So my name is Rafael, and we are a blockchain-based accelerator focusing on fintech startups. And we have done in the last 4 years many projects with tokenization. So what we do right now is that we are understanding or try to understand how securities and security tokens can be a tool for also non-tech startups to get capital increase and just get financial new possibilities. And we do this out of Berlin here, and but we work globally, focusing a lot between East Europe, Central Germany, and we did also a couple of projects with Taipei, Kuala Lumpur, and Singapore in the last 4 years.
Yeah, I'm Albrecht, founder and CEO of Bitbond. It's a great pleasure to be here. At Bitbond, our business model is to provide software and financial technology primarily to banks, financial institutions, and larger securities issuers. As we have heard, in 2019, we conducted Germany's first, what is called now a security token offering. We have issued the first completely dematerialized security in the German and European market, a bond which still is ongoing and has a 10-year maturity. And since then, we have started to provide our tokenization expertise primarily in the regulated financial markets to banks and other financial intermediaries. And also ranging from west to east, or further east engagement is with Standard Chartered Bank in Singapore. So there's a bit of a connection at Bitbond also between Europe and Asia. And again, very happy to be here and thank you for the invitation.
Fantastic. I mean, since you guys are both involved heavily in the startup space, and I mean, we all know that crypto space is like advancing like really quickly. We had lots of challenges though, unconventional challenges with the COVID or pandemic in the last years. So we as an investor saw that a lot of early stage startups had to struggle because some of them have like short runways when they raise money, especially like if it's pre-seed or seed. What's your experience, or like what are you guys like last touch points in regard to like fundraising in the last 2 years? Be it as an investor, be it as from a startup perspective, and what do you think has changed from pre-COVID times in your experience? Rafael, to start.
Yeah, so there was definitely a flip. I mean, several of our projects were funded in the year where COVID kicked in. So the first year was quite normal and just like a year of burning the profits or the cash we received. But then in the end of the year, when also the second lockdown kicked in, we saw that onboarding new investors was a very tough and difficult situation. So we had lots of talks. Everything was, of course, the talk size increased because everything went digital. So there was no flying around anymore. But the decisions by new investors were quite, not bad, but they were basically not there. So most of our projects got like a bridge financing by the given investors. And this was the most common tool, which we observed also with other projects in our space. And for now, this is changing. For now, we see that the bridge financing rounds are closing, and now tokenization, in Germany, security tokens are getting more popular. But we see that also VCs are now not only investing based on equity, but they also start to consider possibilities for security tokens in specific jurisdictions where this is regulated in a way where they have gained trust and to start investments into that space.
Yeah, my observations are somewhat similar. I feel like in 2020, in combination with the, I'd say, dip in both traditional capital markets as well as in crypto, there was also a lot of uncertainty when it came to early stage and VC investments. Decision-making processes were certainly longer than usual. But my impression is that this has pretty much recovered since a couple of months now. And when you look at general fintech funding rounds, but also specifically of companies that are more or less in the blockchain space or crypto space, and there's a lot of activity actually going on again. And I feel like a lot of things have come back to normal, which I believe to a certain degree is also backed by a lot of government funds. There's a lot of cheap money in the market, and when you look at European VCs, a lot of them have, for example, the European Investment Bank as an LP, which has provided a lot of liquidity into the market to pretty much replace what would normally have come from institutional investors such as asset managers or insurance companies, which are often large LPs of VC firms. So certainly the market is somewhat still being supported by governmental organizations, especially like the EIB. At the same time, it feels to me like private money is coming back into the market and things are more or less going back to normal now.
Yeah, I can just add that, this private money thing is also observable. We even sometimes think that some VCs are new funded just like in a FOMO situation. So now digitalization was like a nice to have 2 years ago. Now in post-COVID times, digitalization is a must have. So we see that some VCs, like in East Europe specifically, they are just like new founded with the demand to focus on pure digital projects, and this is mainly for AI and blockchain.
But do you think it gets back to like an old normal, or do you think there's like some sort of like new normal? Like, for example, if we talk about due diligence processes, like from our experience, like when we did due diligences before, then at least that's how we experienced it. There was a lot of physical interaction. It was a lot about like meeting actually teams in person, like brainstorming with them, doing due diligences on site. From our side, we actually did a few investments where, like, I was just in Vienna like last week, and I saw one of the founders we invested in after 6 months, like for the first time actually in person. And for us, it seems like a fairly normal thing, but I think it's interesting once in a while to do a reality check with the rest of the market. So, and plus we are also in the crypto bubble, which is probably also more open-minded than the average VC space. But what are your thoughts on that? Do you think there's a new normal, and how does it look like?
Certainly the process has changed. I fully agree with you on that. So while the investment activity in terms of number of funding rounds and volume of these funding rounds is on a pure fact-based basis, probably somewhere where it has been before COVID. At the same time, again, I agree that the process has changed. I think before COVID, it would have been almost unthinkable that a VC fund makes an investment decision without having at least one face-to-face meeting with the founder team. While today, these things do happen. Maybe it's not 100% of the cases, but it's not something that would remain extraordinary, but it's something that I think does occur every now and then. And we have to consider still that tech as a sector, and not, of course, just the blockchain space, but tech as a whole, has always been, of course, far more advanced than the traditional industrial sectors. But just a couple of months ago, I had a meeting with an executive board member of a relatively large German bank, and we did that through a video call, which of course for me was natural because this is what you do in a tech startup pretty often. However, for an executive board member of a large bank, if you offered them a video call 2 years ago for a 2-hour meeting, they would have never accepted it, and they would have said, well, am I not worth it that you come and see us in Frankfurt or in Munich or wherever they are? Nobody would have even, suggested something like that. It would have been outrageous, while today it has become normal. And I don't think this is something that's going to change. I think, when you don't have like a 1-day, 2-day larger meeting, but it's just, a quick get-together, I think it has become accepted to do these things online. And of course, in the investing world, it might not seem as unusual as in other contexts, but there it's definitely also observable. And I think we almost have to reflect on it to consider that this is also actually, compared to what was going on maybe 2 years ago, rather unusual.
Yeah, I can just agree on this. Our last investment, which happened 4 weeks ago, was with a traditional VC who never met us before. So this decision was just based, and also the due diligence on Zoom calls. But he also said that this was his first investment in that way. And he was not coming from the crypto blockchain space. So thank God we are not in a bubble anymore. I think this bubble left, and again, it's like, I think it was a must-have to meet. Now it's a nice-to-have to meet. Yeah.
Well, as long as in the long term it also impacts the performance, right? I mean, if it turns out that the startups that you did not end up meeting in person are the ones that failed statistically, then might also impact that. Yeah.
The good thing is that you do not need to drink so much wine anymore, because these personal meetings normally were impacting a lot of personal caretaking with these new investors.
Yeah. Well, maybe a matter of time, since we talk about metaverse a lot, right, in the blockchain space. So let's see what kind of solutions we have in a few years to connect in a digital way. But apart from that, in regards to financing forms, so like, for example, we, as an accelerator, we do only equity-based investments, but there's a lot of, especially in blockchain space, there's a lot of other alternatives of financing. And I think you both have experiences, right, with like STOs, like I think, Rafael, I'm not sure if you also have experience with ICO-related projects. What is your view on alternative financing forms when it comes to startups, like as of now and in the coming years?
Well, I would certainly agree that the number of instruments that are available to early stage tech companies has increased significantly. While maybe 5 or 6 years ago, pretty much the only option that you would have is go to a VC or perhaps business angels in a very early stage, or an accelerator, which all comes down to the same thing, because the financing instrument is always straight equity. Sometimes, in exceptional cases, you might sign a convertible loan, but then ultimately also comes down to an equity stake in the company, because at some point it will convert. Today, you certainly have a lot more instruments available, and I think a lot of that is driven by the blockchain sector. Even though ICOs certainly haven't recovered to the activity level that we saw in 2016, 17, perhaps 18, it is still something that some companies do consider, and I think they might even experience a certain comeback, slowly but surely, over the next couple of years, because at least personally I do believe that they are a very interesting and viable funding instrument for some forms of companies. Certainly you see token offerings here and there. When you look at what's happening on Polkadot and Kusama, for example, some first parachain auctions on the Kusama network happened, and they were effectively kind of like ICOs. So that's one additional funding instrument. Then, of course, security token offerings. We have seen maybe not a huge wave of them after we have done ours in 2019, but there are STOs that happened, and I think the activity is also increasing, at least from the requests that we are seeing. I do expect expect the STO as a funding instrument to gain an importance. So these are just a few examples. Probably there's 2 or 3 more instruments. But as a whole, I would say the spectrum of financing instruments that are available to tech companies that are early stage has vastly increased compared to what it was 5 or 6 years ago.
Yeah, absolutely. I mean, I remember when I moved to Berlin in 2012, and then I went to a meetup, and then there was a fancy company startup called Kickstarter, who was presenting the idea of crowdfund raisings. And it was, back at then times, the tickets were small, and the idea was new. Today it's a standard when you want to launch a tech product, but also to a certain amount of investments. Tokenization is now then the next level. It's in crowd fundraising 2.0, but you can also use it then for the institutional investors as institutional fundraising 2.0, if you want to give it a name. I mean, there is a big trend. I think these first ICO waves, which we have seen and we all heard about, this was a great example where tech founders, without the traditional businessmen, could raise significant amount of money. It was the first wave where tech people could just access money without having this CEO by side, who was normally taking care about investors and credibility issues. So, but if you compare it in figures, like what the trend is, in 2019, and we did this analysis, and we were reading a lot from coinmarketcap.com and from PricewaterhouseCoopers, there were some assumptions. In 2019, the total raise globally with ICOs and STOs was $4 billion.
In 2019?
In 2019.
Oh, that's impressive.
So in 2021, and we did this in summer for Q1, Q2, it got up by the factor by 20. So we have a huge amount of token raises globally in ICOs for utilities, but also in STOs, which is happening. And I think the estimation for 26 is around 900 billions, what I read recently, only for security tokens. So we see 2019 4, 2026 900. I think we are just now in a new wave of that kind of instrument.
So this is a more agnostic crowd today, so like not only blockchain based. Like how would you maybe characterize from a startup or venture perspective, like when would you say it makes sense to actually consider an ICO and STO case when it comes to fundraising versus a classical equity case? Especially if you characterize it for someone who is not super familiar with like what ICOs are actually about.
Well, I take this example with this traditional Kickstarter and crowdfunding. This is great if you have a nice to grab product which people can just order and you want to raise 50, 100, 200,000, maybe 500,000, but then it somehow ends. And then tokenization comes into the game where you can decide if you go for 1 million or maybe 2, 3, 5, 8 or even more. So, but tokenization, if we take the example and Radek will share with us a little bit more on that, is that it's an alternative for financing or a convertible loan, or it's an alternative if you get a loan from the bank, specifically for securities in Germany. So I think that right now, if you want to raise between 1 million and 5 security tokens in Switzerland or in Germany or in Liechtenstein, in these kind of jurisdictions are very good to have a view on it. And if you're going to go for more raises, if you're really a true tech company, if you have already an MVP, you have a great team and they already developed it for a year, then you can consider to go on a decentralized exchange and try a utility token raise, which is then an ICO. But that's again a little bit this crazy crypto world. ICOs still remain a tool for the young developers who do not want to talk to Deutsche Bank or to Frankfurter Börse. And STOs are the tools for all the entrepreneurs who have no clue about Bitcoin, but they want to use tokenization as an alternative for traditional investors or going to the bank for a loan.
Maybe at this point also favorite ICO projects so far?
Well, I'm half Polish. I can just share that one of the biggest ICOs this year happened in Warsaw. It's called Student Coin. And they raised more than $50 million in 3 months. I was in Warsaw when they started, and I was in Warsaw when they finished it, so I was very nearby it. And it's also a great tech team, and yeah, this was in my case, I think, globally one of the biggest ICOs this year.
I would add one thing on the question, when is an STO or an ICO the right financing instrument? I think an STO makes a lot of sense, especially when you are a company that already has a pretty broad user base. When you have thousands or even millions of customers and users on your platform or on your product, then it's normally relatively easy to get them excited about also taking a equity or a debt capital stake in your company. And in that cases, you might even get better terms than when you went to VCs or more traditional financing options. So this is something to consider. The ICO type of financing, I would fully agree with Rafael, is suited when you have a very strong tech relationship, or your product is a tech product like a protocol, for example, or another DeFi platform, because then you can get investors excited about your project who might have a pretty deep technical understanding of what you're actually doing, while a traditional VC might still not be familiar enough with some of the tech environments that are there. So I would really look at, what kind of product do I have, what kind of users or customers do I have, and that often determines also what is the right financing instrument.
I would like to add that if you compare this utility tokens or security tokens, VCs, we have seen, this is just a private story by side to it, but I think it's a good moment. We saw, like in discussions with VCs, that they are not eager to invest in utility tokens so far. Even they have a look at it with the due diligence. But then after closing the discussion, they call you privately and you ask, on which decentralized exchange are you buying tokens? Yeah. So you see that there is like there is a private interest into it, but there is like still not the official due diligence focus on it.
And often they are not allowed based on the rules that they get from their LPs where they can invest in. There is a number of funds already that explicitly invest into protocols. So I have met a few VCs who do that and who do that fairly successfully, I must say. But it's still rather a niche than the mainstream, approach that VCs take to investing.
Yes, definitely. By the way, do you have a favorite ICO project so far? It's always a question I like to ask people from the blockchain space, because there's been a lot. When there's disruption, there's always a lot of crap, unfortunately. So I think it's always interesting to differentiate.
Well, the first one that comes to mind probably is Filecoin. I was extremely skeptical of it at the beginning, I must admit, but now I have started to get quite excited about it. There is 2 or 3 others, but probably Filecoin is the one that comes to mind first.
All right, fair enough. Maybe in context with that, so when we talk about investors, we talk about the international landscape. Like, what's your? I think you mentioned this already a little bit with like Polish investors, or like, what's your experience in general like with international investors? Like, again, you as an investor, maybe if you're an angel investor considering a startup that's abroad, versus you being a startup and considering getting someone on board. Because from our perspective, we also invest in startups abroad. We have US-based investments in Belgium and Austria and a few other countries. And I mean, it's always like, we do only equity investments, but even there, like legally, it's always like super like inconvenient, because every country has different regulations. Like, even if it's a normal equity-based investment for a company, not even something more sophisticated like a token structure or whatever. So what is your experience in this, and where do you see the hurdles, especially since this conference is in light of Asian / European relationships?
Well, I personally made the experience more than once that for investors from outside of Germany, sometimes it is difficult to wrap their heads around some German regulations when it comes to taking an equity stake in a company. Everything has to be notarized. Typically, the investors have to show up in person. If they can't show up in person, you need a power of attorney, which also has some funky requirements around it. And then the process takes several weeks because of that notarization. So that's the bad news. At the same time, it is possible. You just have to follow the process as it is. And once foreign investors from a German perspective get accustomed to it, then it's not so unusual to them. But when they do that for the first time, they're always surprised, man, do I really have to go through this? And then you tell them, yeah, unfortunately, there's no other way around it. This has to be notarized, and unless we file an IPO and you can buy public market stock, the process is this complicated. And I feel like in many other countries around the world, it's slightly less formal and slightly less complicated than in Germany. And I would actually hope that this is going to improve. But yeah, for the time being, I think international investments are becoming more normal and also more usual. Also, maybe this is partially driven by, you know, the more remote style of work that happened through COVID. But yeah, when someone comes to Germany for the first time as an investor, they definitely have to get used to a few formal steps in the process.
Yeah, I think when I look back the last 4 years since we are doing all of these venture building talks and exchanges with investors, I need to say that when I reflect this, like there were non-investors from Germany investing directly into our projects, even they were in Poland and Germany and in, somehow in Asia, but there were many from Singapore or from Malaysia or from Poland or from Estonia. So I'm not sure why. We did a race in Germany, but it was a decentralized race from a DAO, and it worked well. So I can only say that our experience is that when it goes to East Europe, you can catch investors very fast with your personality as a founder, very, very fast. You can like build up in 2 meetings a high level of trust, and then if the idea fits, they just really like to invest in you. But the opposite we feel when we go more than into Asia, there the idea is very, very important. The founders team is also nice to have, but then the idea and the momentum of the opportunity has a bigger importance in the talk and in the pitch. And I would say you should, as an entrepreneur, when you want to create a startup which is building bridges between Asia and Europe, you should be aware of that.
Any learnings in regards to the legal structure for you guys from a startup perspective? Like, for example, if you look at Y Combinator in the US, then I think they literally force every startup that joins the program to have a Delaware corporation, right? Like they have this really like standardized framework for the US at least. Any learnings that you encountered, like from your perspective, for Germany or Europe or Asian related?
I mean, in Germany, the standard is to have a private limited company, a GmbH in German. And I can't think of one example where, you know, a company has chosen something different. Some do a stock corporation, but for, you know, an early stage.
We have some applications with GmbH actually.
Oh really?
Yes,
oh wow,
yes.
that is
like
bold.
not every founder is legally educated. Yeah. So
yeah. Well, maybe they don't know what they are doing. But you know, the liability aspect of you know, having personal liability in the company is something that at least I would not advise early stage founders to do, and also not later stage for that matter. In the past, sometimes it has been seen that German founders have founded actually a UK limited, but now with the Brexit, this has effectively, this is not an option anymore really. Just recently I saw some statements by German courts that they don't accept the limited in the UK as a limited company anymore, but actually the shareholders have personal liability, so it comes down to back to a GbR or something like that. I'm also not aware of German companies founding a D Corp. At least I haven't seen it. You know, of course there are always exceptions, but I'm not really aware that this is happening. At some point, it might actually make sense to transfer the company into a stock corporation, which makes secondaries easier, and you know the whole notarization process might be easier. But you know, this is not something that I would really want to deal with as an, you know, as a founder in the first, you know, couple of months, because of course also the overhead that you have with running a stock corporation is a bit higher than a private limited company. So yeah, unfortunately, actually, there's no real innovation there, and I would hope that we get this digitized GmbH private limited at some point that will hopefully either completely remove the notarization process or at least make it easier than it is right now, because I do see that as an actual burden.
Yeah, I can just add, I can agree on this, and I can just add that observing, again, like this, maybe when it comes to tokenization, companies who tend to make an STO in our portfolio, they tend to a very easy, standardized limited, a GmbH, which is like completely fine for this. And the projects who tend to make bigger raises, maybe with an utility token, but with security features, they go more for the stock company. And then basically in these famous jurisdictions like Switzerland or Liechtenstein and so on. So that's the trend we observe.
Maybe talking about jurisdictions, I think Berlin has been clearly one of the leading ecosystems for especially like blockchain, like protocols or blockchain-based teams, like talent. I think there's several reasons for that. Probably the spirit of the city itself to some extent. How do you see this right now, like since COVID? Like has the ecosystem of Berlin in regards to blockchain changed? Like the level of talent it attracts, especially on the developer side? And how do you think that might develop the next years? Like what's your outlook or feeling about that?
Well, from our observation, there was a freezing moment. All people who came from abroad to Berlin, they were not leaving massively Berlin during the lockdown. Rather, they stayed, maybe because Berlin was not so expensive to stay in instead of going home. But no, we just saw a freezing moment. Right now, we see a lot of interns and new developers are coming to town since this summer. So, and I got also like 7 requests for a guest room, so I saw there is definitely a trend for that. But I think Berlin is still very, very interesting. So there is no pre-COVID or post-COVID thing when it comes to the attractiveness of Berlin as a venture hub or startup, an IT hub. I think this is even now still the same, and we keep it up. Made in Germany is still sexy, also in post-COVID times. And I think, yeah, that's our momentum.
I don't have a lot to add to that. We have always been hiring developers remotely because we've always found it difficult to find someone in Berlin, to be honest. So for us, it hasn't really changed, and I can't really compare it. Also, some of the other founders that I speak with that are friends and, where I often talk today, most of them were also always open to remote work, so I don't really know. And in terms of projects, yeah, I don't really think that a lot of it has changed because Berlin remains to be as attractive as a startup hub for tech in general and for blockchain specifically. So yeah, I don't think a lot has changed in that regard.
Okay, so you don't see changes in regards to people spending much more time at home regarding home office, so there's like less need of being in this like central like city and...
Well, yeah, that is changing. What I thought about was whether Berlin still attracts, exciting projects and exciting people, which I do think is the case. But yes, of course, the way people work does change, and maybe not everything is so focused around the center. But at the same time, I believe that people would still want to come to Berlin to be here. Maybe they don't spend 5 days a week in the office, but they still want to be where, things are happening.
Yeah, for this home office situation, this is definitely a change. So we moved 3 projects in new offices since last summer, now in the last 9 months. And in all cases, there were always just 70% of desks were bought for the whole staff. So 30% was already calculated that they are like somehow not available on that same day. So all of the projects are accounting that it's hardly that you have the whole team on site. Yeah. So they reduce costs in terms of office spaces and desks, available desks, and it's also like a flow of who is getting 2 days in a week or 3 days then for the home office for the remote work. So I think this is definitely a big change, and it's already normal for us. Maybe that's why we are not thinking of it.
But you wouldn't say as you said, you wouldn't say the city is suffering from it, because if I go to Frankfurt in COVID times, then it feels like a ghost town. But in Berlin, at least that's my experience, I don't feel like that in Berlin. So I think there could be the argument that maybe, some cities are more like preferred from people like actually living there like than others. And it's just an interesting trend, right? Because a lot of co-working spaces, they spend a lot of time on this, thinking about like how it changes the landscape of working, like and so on and so on.
Frankly, I just think Frankfurt is super conservative. Some of the banks that we're working together with, people are still not, back in the office. They are maybe in the office 1 or 2 days a week, but not because they want it like that, but because the regulations in those banks are that way. And so I think in Berlin, a few things are a bit more easygoing, and life is probably happening more in physical presence than compared to a city like Frankfurt.
So you guys don't want to move to Frankfurt, I assume.
It's not on my agenda.
Okay. Yeah, cool. Then if you look at the blockchain space as a whole, like which like use cases or trends make you feel most excited for the coming years?
Trends in terms of tech, or just like the new
It
unicorns
could be overall
popping up?
tech trends, but also specific use cases. Like if you pitch like the blockchain industry and the capabilities and the use cases that result from it as an innovation or technology driver itself to people that do not come from this industry, what do you feel most excited about pitching them?
I think there are, like 3 years ago, there was all this about trading and payments in the crypto space. This is not like the big thing today. I think today we have this second layer protocols, and also just like protocols who are trying to give in the Internet of Things just a new level of trust, like digital certificates, and just like approving already existing processes, but making them very solid, making them very trustworthy, just lifting up the trust paradigm to a new level. We have one project, it's in Warsaw in Poland, DoxyChain, and they are putting traditional documents on blockchain, which is then giving a completely new security level. You can basically upload your testament now in a digital way and putting some smart contracts on it. So the moment when you die, then certain things are automatically activated. And today it's just like maybe still an idea. And I think in 15 years, it's like normal, it's more secure to define this, what will happen with your relatives when you die. And this is just a very simple use case. So I think everything about paperless solutions, contactless solutions will massively grow. And today I read online that the former bank, I was working for US Bank many years, it's the 5th largest bank in the States. They announced now that they are going to make institutional wallets on Bitcoin, like for big institutions. So even my old world is now adopting into it, and I'm just seeing that this is happening in the next 10 years. So, but I don't want to say that this is now the project who is going to be the next decentralized Google or something. This I also do not know, unfortunately.
Well, I have to say I have a bit of a bias, of course, when it comes to applications of blockchain towards financial markets. There's a lot of banks right now that have understood at least the basics of what blockchain means, what cryptocurrencies are. A lot of them are starting to introduce cryptocurrency trading for their customers and also for institutional investors. So that in itself is pretty exciting. Someone who's dealing with, digital assets on a day-to-day basis, for them, cryptocurrencies is so common that, they don't even think about it. But for banks, this is actually a pretty big step, which in turn makes cryptocurrencies, again, even more attractive. And I think that is something that's still going to drive cryptocurrency prices up over the next 2 to 5 years. So that in itself, I find pretty exciting. Then, of course, tokenization of securities. There are some banks that are starting to tokenize bonds, retail structured products, fund shares, equities, loans. And there we are just seeing some first baby steps. And probably it will take 5 or 10 years until all public market securities exist in a tokenized form. but that's going to be a huge tectonic shift in how capital markets function from a technological standpoint. So this is something where I get super excited about. And there's plenty of other fields. DeFi also still something from the rather financial services space. I think in DeFi there's still a lot of technical barriers that need to be overcome. At the same time, there is a clear path how they can be overcome. So I don't think it's a question of if, but rather when that's going to happen. And then I think DeFi will replace a lot of functions that traditionally banks would take on. Yeah, so these are certainly the things that I get most excited about, and then there's probably 5 or 10 other use cases, which might even take this panel for too long. But yeah, again, I'm, me coming from the financial services space, I always, look more on the financial services side of applications.
I think one big trend will be that people are not aware anymore that this is like in tokens or cryptographic technology or blockchain based. So you will have use cases where this is just one part in the technique, but no one will take care about it, that it will be just a given standard. So I have no examples of startups who are not pitching without blockchain or with their cryptographic thing yet. But I think that even in the security token space, this will be quite fast adopted, because then you will speak about digital bonds instead of always like tokens, tokens, tokens. So more and more we see that people are not using these buzzwords anymore and just saying what it is. It's a new digital bond or something new in the digital space.
All right, fair enough. If we wrap up our session today, then what would you say were your key learnings that you would like to share from maybe the last few years in this industry? And what's the right angle to approach you for anyone who's watching you right now?
So when it comes to the topic is investing, yeah. So I saw a lot of founders who were always planning to do it, but actually you should just do it. I know it's you heard that sentence all time long, but it's really true. You just need to stop to do what you do in a normal daily life, and then just do your idea, and then you approach the people around you, and you will amaze them, because in the end, investors would like to invest into the people and in your idea. It's not only the idea. And the key learning is that cryptocurrencies, as Radoslav just said, they are since many, many years out. Banks are now even having a look at it. So my learning was that me privately investing into token projects went somehow always well, and I see that this market is still like in a very early stage still. I had that feeling 4 years ago when I started, and I have today this feeling again when I'm reading all the news. And my mom is sending me some news on WhatsApp about Bitcoin and blockchain, and then I see, wow, even she is getting it. So this is for me, these are all the key learnings that I see and makes me happy. So just get the shit done, and then you will be happy.
What I continue to be excited about and almost surprised about is how fast things evolve. I first heard about Bitcoin in 2012. Then in 2013, I started to think, yeah, well, this could be something that is here to stay. But I thought it's gonna take forever. And when you take price as an indication for adoption, frankly, a few years ago, I would never have expected that, in 2021, the price is going to cross 50, 60,000. Currencies, they either said, well, it's going to go away at some point, or yeah, it might be here to stay, but it's going to take 10 to 20 years, until we see the adoption that we maybe already see today. And sometimes I was also kind of going into that fallacy and thinking, yeah, things do take a long time, and it's still a bubble of tech people who get it and who like it, but until we see a more mainstream set of investors getting excited about it, is going to take way longer. And now look, today you can buy cryptocurrencies easily. Maybe if you don't want to hold them directly, you can go through eToro, Robinhood, or all these trading apps, Trade Republic, right? And it is becoming more and more mainstream, and there are studies that show that actually a lot of the trading volume is still driven by retail. Institutional investors mostly haven't even entered the market yet. However, the adoption by retail from an investment perspective went much, much faster than many people assumed, at least faster than I assumed. And this continues to be a pattern. This is not something that seems to be slowing down. So that is my learning over the past years about the space.
At the right angle to approach you?
You can find me online.
Okay, fantastic. Yeah, then thanks a lot for the panel, guys. It was a lot of fun. Thanks for the insights.
Thank you.
And
thank you, Benjamin.
You, yeah?
All right, thank you. Thank you so much, everyone. Thank you so much, Benjamin, for moderating this wonderful panel. Thank you so much, Rafael, and thank you so much, Radoslav, for this amazing and sharing your amazing insights on how investment is in blockchain. We are seeing investment from VCs. We are seeing institutional adoption, and I'm pretty sure that blockchain is a force to behold, and most of our lives will be impacted by it. So thank you so very much. And on that note, I would like to thank all of you, everyone who has been a part of this event, our panelists, our presenters, Asia Berlin, Chain for organizing this amazing event, and absolutely to all our online viewers who have made this event a success. And on that note, I would like to end this event on with one quote that comes to my mind right now from Elon Musk's: "I could either watch it happen or be a part of it." And that quote got me involved in blockchain, and then it got my attention, and I became a part of the blockchain community. And I'm pretty sure that you guys have your own reasons to become a part of this massive and wonderful blockchain community. And on that note, I would like to say a very a massive thanks to everyone who has been a part of this. And we hope to see you next year. And thank you so much from the Mecca of European blockchain community. And thank you so much. Take care. Bye from Berlin.